Really challenging trading day. We were up at the equity at the highs of the day, and the market rolled over on us. We tried to join the bulls when this market rolled over. Thought we would, take some short trades. I thought the market would roll over into its natural trend, but it was propped up again, and it's continued propping in a market that should go down, in my opinion. And we're down $4,500 on the day in the 200K portfolio, down $1,125 in the 50K portfolio, bringing us back to around break even on the month. And so it's been a frustrating summer. Two of the big run-ups that we had this summer were missed. I sat out with COVID, and then we are waiting for our next run-up, and we're just experiencing extremely choppy market conditions. We had rollover day. The order book looked really choppy. Jay Powell spoke the first 20 minutes. And what happened on Tuesday is we had this divergent chop where or convergent chop where it chops back and forth, but in a narrow range. And yesterday we had this rally. This was the 7th down day in a row, and we anticipated higher prices. We got those, and then the market pulled back, and I thought it would have another up day. We were up near the highs, and it rolled over. I said, okay, we're going to resume into the downtrend. We had some short trades on gap continuation, and then it just reversed again. We have this divergence and then convergent chop, just really choppy price action. Very hard to trade this. And so let's go over the trades on the day. Looking at the S&P trades, we had a 60-minute breakout short, had a pretty good day, went short, hit his profit target, took a long trade, stopped out, took another short trade, hit its profit target. So did well shorting the market on an up day. Momentum reversal. Jumped onto this long trade. I thought this would go higher. Really pulled back. Huge pullback, more than Fibonacci. And then it rallied higher into the close. Very choppy. Let's look at the NASDAQ trade. So we were 1 out of 2 on the S&P strategies. So EVP1, it hit short trade, stopped out. Long trade, small profit. 60-minute breakout, 2 losers, 1 winner. Gap continuation, got short. This is the one we had strategies that were long, and as it rolled over, the gap continuations got short. I thought this was a good trade. Oftentimes when it retraces this far, much more than a Fibonacci. You can see Fibonacci by going up to drawing Fibonacci retracement lines. And if you take a look here, oftentimes when it goes beyond that Fibonacci retracement, here's a 38.2%, here's 68.2%. It's coming all the way down here. It didn't break the lows. The lows held up, and so this is excess liquidity continues to prop this market up. And we'll look at the Fed balance sheet as well. They just released the Fed balance sheet. It's only down $3.6 billion this week. It's supposed to go down $95 billion a month now that we're in September, the Fed's balance sheet. First week out, $3.6 billion. They need to pace, I guess, if you on a 4-week basis, you need to pace about $23 billion a week. Only $3.6 billion in the first week. So maybe it was the holiday. Maybe they will catch up. Maybe they will not follow through with what they said they were going to do. And those that say the Fed will pivot, even though they say they're not, maybe they're right. And so the liquidity remains in place, propping the market up. And so that was gap continuation 2022, has a tighter stop. It was stopped out here as well. And tick reversal, took this long trade, stopped out on this huge pullback. We're getting big pullbacks on up days. And then got long here, was profitable into the close. The last 2 trades on the day were profitable. This tick reversal trade and this EVP1 trade. We didn't trade much after gap continuation was stopped out. Let's look at momentum reversal, rolled over, stopped out. VTNQ bought it up here at the highs, and it was stopped out as well. So a difficult day, difficult trading day, right at break even on the month, coming into our best trading day of the month. Typically, a trading day of the week is Friday, and we've been here before where Friday bails us out. And so looking at going into Friday on a holiday shortened week, and so we'll see how it will work. Just saw some interesting commentary that based on earnings, based on inflation, the actual price Pricing of the market should be 20% lower. That would have a NASDAQ. This is by mid-October. NASDAQ 10,000 and S&P 3,200. Just one set of commentary. You never know on that. So we'll see if the Fed pivots or if they continue to fight inflation. And so those are the trades. Final trades on Thursday, September the 8th, 2020. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.